John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. I am a consumer credit expert. I've spent almost 30 years of my life in the credit industry. It's actually my 30th anniversary this month. I spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the 3 generally recognized credit bureaus in the United States. Today we're going to talk about student loans, credit reports, and credit scores. Specifically, do student loans affect your credit scores, and how do they affect your credit scores? So student loans are almost always going to be reported to the credit reporting agencies. In fact, the Department of Education requires the loan servicers that they do business with to report information to the credit bureaus. So it's almost like it's not even a choice. And the way that student loans are reported is very different than how, for example, a mortgage loan is reported, or a credit card is reported, or a home equity line or loan is reported. Student loans are reported on a disbursement by disbursement basis, almost as if they are separate loans. So for example, if you went to school for 4 years somewhere and you took out, 8 student loans to pay for the various semesters or whatnot, even though you owe collectively one large amount of money, it's actually reported to the credit reporting agencies for every single disbursement. So in the example that I just gave you, that would result in 8 student loans appearing on your credit reports. Even though you may only make one payment every single month and then that payment is distributed across your different loans, it still shows up on your credit reports as 8 separate loans. And so you're probably wondering, whoa, wait a minute. So that means I have 8 accounts on my credit report? In that scenario, you would have at least 8 accounts on your credit report. So to the extent that you're paying them on time, that's actually really good, because one of the challenges that people face, either people who are new to the country or young people who haven't really entered the credit environment yet, they may actually graduate from college with a really well-established credit report because of the student loans they've taken out. Now that you have that, now you have to determine how best to manage them, because once they come out of deferment, then you're going to have to start making payments on them. So if you make payments every single month on your student loans, then really they're treated no differently than paid on time installment loans that are current and in good standing. So that's actually really good for your credit scores. I mean, you want to have good things on your credit reports. To the extent that you start missing payments on them, that's when student loans can really become a huge problem. Notwithstanding the fact that you don't want derogatory information on your credit reports, which is obviously bad, but because of student loans reporting on a disbursement by disbursement basis, when you miss your payment, you actually miss your payment on multiple loans, right? So if you miss a payment on a credit card, it shows up as one late payment on one credit card. If you forget to start paying your student loans, it's going to show up on late payments across all of them. And so the example I gave you a moment ago, that would actually show up as being late on 8 separate accounts. Well, needless to say, that can be very problematic for a credit score, because credit scoring systems do consider the prevalence of negative information on your credit reports. And so that could mean that, 8 derogatory entries worse than 1 derogatory entry. Of course, this would need to all be simulated, and you can't just make that statement universally and be correct 100% of the time. But generally speaking, you want to have fewer of those things than you want to have more of those things. So that's also one of the issues with respect to student loans. So one of the questions that I always get about student loans is, well, even if I'm paying them on time, doesn't the fact that it shows 8 of them on my credit report, isn't that a problem? And I can tell you that from an installment loan perspective, it's not that big of a deal. If you had 8 credit cards with balances, that's a different animal, because credit cards are revolving accounts. Revolving accounts are considered differently than installment accounts. Installment accounts, where you have a fixed payment for a fixed period of time, like a student loan, that type of debt is less predictive of elevated credit risk, and therefore it's going to be less problematic. You can actually have a ton of installment debt on your credit reports and still have elite level credit scores. So if you think your student loans show a lot of debt, wait till you go out and buy a house. Your house is probably going to be multiple times more than whatever your student loan debt happens to be. And as long as you pay it on time, then you're still going to be able to earn and maintain really solid credit scores, even if you have all those student loans. So in the grand scheme of things, student loans are not that big of a deal. Look, this is not me trying to insinuate that student loan debt can be problematic just from a debt perspective. That's a whole other issue. I'm just talking about it specifically from a credit reporting and credit scoring perspective. Not a big deal. So if you have any other questions about student loans, drop them in the comment section below and I'll do my best to get to them. Thank you so much for watching. Have a great rest of your day. We'll talk again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.